Welcome to The Explainer. Today, we're jumping right into the Nigerian property market. Why? Because it's being supercharged by this massive new force. And if you're looking for real opportunities, you have got to understand what's happening on the ground right now.
So let's kick things off with the single most important number you need to know. $23 billion. That's the record-breaking amount of money that flowed into Nigeria from the diaspora in 2025 alone. And believe me, it's acting like rocket fuel for the entire market.
And you gotta understand, this isn't just people sending money home to help out family anymore. Oh no. As our source material points out, this has become a tidal wave of capital. We're talking about a really sophisticated investment movement that is actively hunting for high-yield properties.
So let's break this down. What is this catalyst really? And why should it matter to an investor like you? Well, this isn't just some number on a spreadsheet. It's a fundamental shift in how the entire market is funded, and, maybe more importantly, where all the new growth is coming from.
Just look at the sheer scale of this. In 2025, that money from the diaspora made up over 11% of Nigeria's entire GDP. Now, to put that into perspective for you, this flow of cash is now way bigger than traditional foreign direct investment. It means the global diaspora is now, without a doubt, the most influential investor group in the country.
Okay, so where is all this money actually going? Let's dive in and follow the capital. By looking at the hottest investment opportunities on the ground, we can start to see a really clear picture of what a modern and profitable portfolio looks like in 2026. And what's fascinating is the mix of opportunities this money is creating. Of course, we're seeing a boom in things like short-let rentals and built-to-rent communities, which makes sense for the growing urban professional class. But what's really interesting is that these diaspora investors who know the global trends are also pushing for newer ideas, like sustainable, solar-first estates, and more accessible things like fractional investment and REITs.
But here's where it gets really critical for any investor. The data shows these massive differences in how properties perform across the country. This is not a market where you can just throw your money at anything and hope for the best. Location and the type of asset you buy, well, they're everything.
And I really want to hammer this point home. When you look closely at the rental yields, choosing the right neighborhood and the right kind of property can literally double your returns. Seriously. It's the difference between having a golden goose and, well, a financial dud. This chart just illustrates the point perfectly. Look at the top here. A 4-bedroom terrace in Ikoyi, Lagos is pulling in a gross yield of almost 7.7%. Now compare that to the bottom. A 3-bedroom apartment in Wusatu, Abuja is only getting 2%. The gap between the best and worst performers is just enormous.
Let's just visualize that for a second. That difference between the Ikoyi terrace and the Wusatu apartment is a staggering 5.69 percentage points in gross yield. This is exactly why making decisions based on data is absolutely non-negotiable if you want to succeed here.
But you know how it goes? High rewards often come with pretty significant risks. So let's get real for a minute and look at the challenges every single investor has to be aware of. Trust me, ignoring these is a recipe for disaster.
The trick is to reframe these risks into an actual checklist you can use. Your due diligence has to cover these 4 pillars. Number 1, verifying the land title is absolute. Number 2, you've got to assess the local economic and political stability. 3, evaluate the infrastructure. We're talking roads, power, water. And finally, number 4, confirm you are following all the regulations.
You see, the core problem, especially for diaspora investors, has always been what our sources call the trust gap. I mean, when you're thousands of miles away trying to figure out if there's fraud or if the land ownership is even clear, that's historically been the biggest thing stopping people from investing.
So the big question is, how does a modern investor get around all these risks safely? Well, a whole new generation of tools is popping up to bridge that trust gap, making it safer and easier to invest. And really, it's democratizing access to the whole market.
This is where PropTech, or property technology, comes into play. We're talking about platforms that now let you digitally verify land titles in minutes, whether you're in London or Houston. You can track your rental payments from your smartphone, take these incredible high-def virtual tours of properties, and even get drone updates from your construction site. The days of blind buying are quickly becoming a thing of the past.
Now, for anyone looking for a more hands-off way to do this, there are real estate investment trusts, or REITs. They're a really powerful alternative. Just think of it like buying a stock.
But instead of investing in one company, you're buying a little piece of a huge, professionally managed portfolio of properties.
Let's just compare them head to head. Owning property directly, that takes a lot of capital, it's very hands-on, and it's tough to sell quickly. REITs, on the other hand, let you start with much less money, they're passively managed for you, you can sell your shares easily because they trade like stocks, and you get instant diversification across a ton of properties.
And all of this brings us to the final and most important question for any investor looking at this incredibly dynamic market. When you weigh the huge opportunities against the very real risks, is this the right place for your capital?
So here's the takeaway, and it's crystal clear. The opportunities in Nigeria are absolutely real, but success isn't for amateur speculators anymore. It belongs to the modern investor, the one who uses data to find value, who focuses on growth where there's good infrastructure, and who uses technology to invest with confidence. The only question left is that investor you?